Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, December 14th. Firstly to the S&P 500, and for today's trading we have a continuation of the trend to the downside, with the current candle making a lower high and a lower low, but a day where the buyers took back control away from the sellers. Closely testing down through the 2000 level, that round number level, and being strongly rejected from that area, has seen the market trade down through to the bottom of the Ichimoku cloud, and the sellers have lost commitment down around these very important areas of support. 2000 round number and the bottom of the cloud are always going to be important levels for this market. We've also seen the market close up at the highs for the day, suggesting that the buyers have closed with control as opposed to the sellers of the previous day's trading. And also we've seen formation of a white body candle, so a change in net momentum between the open and the close, away from the sellers to the buyers, and this sets the market up for a potential change of trend back to the upside. Today we've also seen the market take out the 2019 level, previous immediate support level, prior to that resistance level where we had seen prior quite strong rejection, and we've taken that out in a bullish manner, suggesting that there is a very good opportunity here for a change of trend to the upside. We also have a couple of types of Japanese candlestick reversal patterns in play here. The first is a bullish harami pattern. That's where we have a downtrend in place, and always we require a downtrend in place, and that's certainly here with the market making a series of lower highs and lower lows. Also a potential type of hammer pattern, and that's where we have the small body with the largest shadow on the bottom. Usually that shadow has to be at least twice the length, and I think we fulfill that requirement. So very good potential for a change of trend to the upside. If we do see the change of trend, however, we may find very strong resistance around this 2040 level, previous resistance level. Previous support level in the immediate past, previous resistance level about a month or so ago, and there is an opportunity here for it to continue to hold as resistance. And even if we do trade through there, we have the top of the cloud just above there, and we could find some resistance coming in there around 2046. Looking next to the Fibonacci extension tool, and we're examining the relationship of this current first time frame downtrend to the immediate previous first time frame downtrend. And here today we have the market trading down to the 161.8% level, exactly to that level. It coincided with the bottom of the Ichimoku cloud. We've seen the buyers come into the market very, very strongly, and suggesting that there is very strong potential for a change of trend back to the upside. Next to our market breadth indicators, and firstly the cumulative advanced decline line, and here we see it moving lower. It is still down below its 50-day moving average, suggesting that there's no sign here on the advanced decline index that we are going to see any retracement. But with the sellers losing commitment and the buyers taking control, it does suggest that there is potential for a change of trend. So it's not showing up on the advanced decline line, but that doesn't always tell the whole story. Next, with the Hawland indexes or indices, and firstly to the short term, we have just seen that tick up. It is down below its oversold level, down below its average, suggesting that there is a possibility of seeing a change of trend to the upside. But looking at the longer time frames, they do take a bit longer to turn around. They are very bearish in their depth away down below the bands here and below their averages, and suggesting that in the medium term to longer term time frame we aren't necessarily going to see a turnaround, but that could change if we do see a first time frame uptrend. And as I've said, the short term Hawland index has ticked up, and suggesting that we could see a change of trend to the upside. The other indicator that has been giving us some good indications recently is the new highs, new low variations. And firstly, with the ratio, that is still at a low level, the ratio of new highs to new lows, so we're not seeing a pickup there. And also the cumulative new high, new lows over a 1 year period for the year has not picked up as well, suggesting that we're not seeing any signs of an overall flow of stocks completing new highs. And also to the amount of new highs, new lows over the 20-day period, reflecting a month, so looking at a much shorter time frame. And the new high, new low ratio, this first subchart, is still at a low level. It hasn't ticked up. It is down at the lower band, suggesting it is overdone. But looking at the cumulative new high, new lows over the last 20 days, and that is still pointing down and not reflecting any buying coming into the market overall. Next to our market sentiment indicators, and firstly to the percentage of stocks that are above their one standard deviation band. So we're looking at strength, the percentage of stocks in the S&P 500 that are showing us some strength, some initiation of strength. And we have seen that percentage just tick up. It is low, it's down around 6%, but it has ticked up from a low, and suggesting that we are seeing a flow of capital into buying stocks as opposed to a flow of capital out of stocks. The percentage of stocks below the one standard deviation band, that's the bottom subchart here, has turned down and it is now at 63%. Even though it's at a high level, it is looking overextended and has moved down, and suggesting that we could see a change of trend in the S&P 500 to the upside. To the percentage of stocks, firstly in the first subchart, that are above their 5-day moving average, and here we've seen it move up to 20% and from a low level, and that's suggesting that we are perhaps seeing a potential change in the market where we could see a change of trend. The second subchart, percentage of stocks that are above their 20-day moving average, has moved up to 19%, so looking like we are seeing a recovery. The percentage of stocks above their 50-day moving average has moved up to 30% from a low level, and suggesting a potential for a recovery. And the percentage above their 200-day moving average has also moved up to 36%. Next to the percentage of stocks that are above their 20, 50 and 200-day moving average has ticked up to 10% from a low level, suggesting potential for a recovery as well. To our Ichimoku composites, and firstly to the percentage of stocks above the Tenkan-sen, and here we see that that's ticked up from a very low level up to 17%. The percentage of stocks above the Kijun-sen has ticked up to 24%. Percentage of stocks above the cloud, giving us a longer term perspective, has ticked up to 17%, whilst the percentage of stocks below the cloud has reduced down to 53%, but still a majority of stocks down below the cloud. This is suggesting that we still have a short-term bearish, medium-term bearish and longer-term bearish indication, but we are perhaps going to see a recovery. Just going back to the S&P 500 quickly, and looking at the band chart, and the band chart here shows that we do have a strong negative tone to this second time frame downtrend, the medium-term time frame downtrend on the daily charts here. Even though there is potential for the market to trade higher, what we do need to watch is that we trade up to the lower band at about 2045, and we could find some resistance coming in that area, and then the market sells off again. So even if we do see a change of trend in that first term time frame, we may find some very strong opposition around that lower band, and then find selling coming in. So let's watch for that very, very carefully. Next to the Dow 30, and some important trading for the Dow today. Buyers coming in, all of the same short-term dynamics that we're seeing in the S&P, where the buyers have taken control away. We're seeing the sellers lose commitment. Importantly, we're still just trading within the Ichimoku cloud, and we have found some resistance around the top of the cloud, roughly about that 17350 level, and that may be a significant hurdle for the buyers. If they are strong enough, they can trade up through there, but they could face some stiff opposition around the 17536 level, where we have the Kijun-sen and the Tenkan-sen trading very close by. Next to the Nasdaq 100, and the Nasdaq 100 has continued the trend to the downside. Short-term dynamics are similar to the S&P and the Dow, where the buyers have taken control, upside momentum, sellers losing commitment, and importantly with the Nasdaq, losing commitment down below this highlighted yellow zone of previous support and testing down to 4483 and strong rejection. Importantly also closing above the Ichimoku cloud in a bullish manner. A potentially strong hurdle may be the window that was opened up 2 days prior, and we have the Kijun-sen and the Tenkan-sen trading within that window, so we could face some very strong opposition to the market trading up through that area. So very important trading coming up over the next day if we do see the market change trend to the upside. and next to the Russell 2000, and here we see the most negative market, the trend continuing to the downside and no white-bodied candle. The buyers have not taken control away from the sellers as well, so we still have downside momentum in net terms. It is very much less than the previous day's trading, so we're looking at the size of the body of the candle compared to the previous, and it is suggesting that there is potential for a change of trend, but certainly not as much potential as we've seen with the other indices. We haven't seen the buyers take control, but importantly the sellers have failed to continue with control, with the market closing around the midpoint level, suggesting that neither side has closed with control. And importantly, the sellers have lost commitment as they tested down close to this 1106 level, just down through the 1110 region. Obviously, this is suggesting that the recovery that we've seen for today's trading with the other indices has not been broad-based, and that's reflected in the advanced decline figures that we're seeing. But by the same token, the lack of commitment by the sellers now and the fact that they've lost control of the market has suggested here that there is potential for a change of trend back to the upside. That change of trend may be short-lived. If we trade up to the Ichimoku cloud over the next couple of days, we could find resistance coming in around there.